Good afternoon, everyone. Hope y'all are all having a good day. This part two, the basics of volume price analysis. So let's begin. All right. For those of y'all who are new, does anybody know what VPA means? Let me go ahead get started with that. Let me know in the comments what you think VPA means. VPA means the volume price analysis, right? It's what we're going to be studying today. The importance of volume price analysis is that volume price analysis is used hand in hand with price action analysis to create a sort of idea, or we can say a on what the market may do. So first off, we're gonna have to we're gonna talk about the what volume means and what are we gonna use to understand it, where we're using to see that volume. And today, we're gonna see the volume indicator, which is the VOL. Typically, these lines that you see on every trading software, trading platform, you have the volume. So, volume itself is the transaction of amount of shares being traded, right? It's the amount of transactions occurring within the time frame that you set the volume candle to, right? So, volume is important to understand for multiple reasons. It tells you where are the more transactions being occurring, which is where the larger moves are occurring, while seeing um where the larger moves are occurring both sides, so either bear side or buy side, while where are also the least amount of shares being traded. So where are the chop or the the low amount of shares being traded being are at. So firstly, we have our volume chart. We're gonna have it on the 3 minute because the 3 minute gives us a good idea of where the volume is in each sort of position of the market with each category of the market. So we're gonna go ahead and remove drawings for today, and we're going to see where it is that the volume is being traded. So how do I personally read volume with the volume indicator? We read it through these lines right here. So if we see that the volume is a lot lower than the first hour, which keep in mind the first hour of the market is where the most amount of volumes are traded, where the most amount of transactions are made are in the first hour of the market, correct? So we have our first hour, and we can mark it through the first hour candlestick, which you'll have right here, this whole box. Or we can go to the 3 minute and see which area that is. So me personally, when I'm using TradingView, what I like to do is I like to grab my measure kit and then see how many candlesticks we have for the first hour. It tells me right there that this was our first hour of trading right there because of right here. So we're going to mark that, come here, and we're going to click the vertical line, have that there. And now we're going to see, okay, notice after this first hour of trading, what happens in the rest of the day. The volume, the amount of shares being traded is lower than the amount of shares being traded here, correct? So how do I know to follow to take a trade? And how do I know to kind of be aware of what low volume can mean in a stock? For me, low volume is important. Understanding the positioning of time when in trading is key, because the first hour is where the most volume is being traded. Therefore, the most opportunities are going to occur. You're likely going to see a larger move, hence the opening jump and then the reject following that. We had about 2 to 3 big moves, about 3, 4 big moves here before the first hour closed, and then we had a few later in the day, but overall a lot of chop occurred down here, right? So the key part about using volume, like I said in the beginning of the presentation, is that you use volume with price action analysis. Use it with, let's say, puts or calls. I want to be able to understand, okay, are the amount of buyers or sellers that I'm focusing on, are they going to be with me, right? Are they going to start selling off? So here in the indicator, on the 3 minute, we have a a few trades being, a few shares, a few amount of volume, right? Let's say we're looking at this, by the way. We're looking at that high day where we started to see wick, which right off the bat, that tells me as a price action trader that we have sellers there, right? We had buyers at temp, sellers are there, another large selling wick, another large selling wick, a third, and a fourth. So for me, if I am a trader that's focused on taking puts, I would go ahead and pull out the volume chart, and this is how I would identify that puts are going to be the correct option in a sense. I would go here and I check, okay, these 4 candles are what I'm reading to try and get this idea, right? Okay, now that I know that, notice how each candle that moves up, this means that more shares are being traded. 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 I'm cutting off. 1 second. No, I don't. My mic should be good. I'm gonna go ahead and continue. But if you do have any questions, let me know in the chat. All right. So each means more volume is being put into the market. More is being traded because we hit a higher and a higher and then a higher, and then eventually we get a full red candle, which tells me, okay, this location, they are being the most sort of traded transaction at the moment. So we come here and we see our first red candle following the breakout of this sort of rejection following a huge run up in the morning, right? So with that, we have that information. You can take your breakout trade, you can take your puts. Now you see that the sellers are continuing. We have now lower trades, lower short trades, we can say, lower transactions being made on these 2 candles. And then we wait, right? And we see a large amount of volume start to step in, larger than before. Again, that happens here. And then a third one down here. That tells me that sellers are really selling the price, and now we got to look for what's going to happen after a large amount of sellers. It's not just going to continue. It's not just going to always continue. There's always breathing room in volume. Therefore, when I'm seeing this kind of move, I am watching, okay, these sellers who sold us very well with a lot of strength. Now I'm going to watch to see where buyers are stepping in, and lo and behold, we got our first wick up, first of all, and then follow that, we got our volume. But notice something. The next 2 candles that follow, although it's a high or higher high than the previous, we still have low amount of volume being traded than before. So the amount of volume traded is less than the volume traded in this candle. Now, this is a thing that confuses a lot of traders. Traders are often confused by the fact that because there's a lot of volume, that means you're going to see an increase in price much quicker. That is not always the case. You can have a large price move, and you can have a low amount of volume, right? Same thing goes vice versa for the bearish side of things. For me, volume is most likely the price moves, right? If I see a stock tank super quick like this did, I would personally see that sellers are very strong. They're very active. I'd say that to me, without looking at volume, I can already tell that the most amount of transactions being traded is going to be that volume for SPY, right? For SPY puts, specifically shorts. So because the next 2, right, one was shorter than the other, that automatically tells me, based on these 2, that sellers are still in control. They're going to continue. And while using price action analysis, we also have the volume weighted average price, which is VWAP, being rejected at the same time, which is where I personally took puts in this morning for one of the trades. And then we got our reject and followed by, again, we got our first candle that's a reject, low transactions of traders, of short traders, which makes sense. I want let me try to ignore this because this kind of messed up. But when we're trading, right, you have to think about the psychology of a trader. This also goes hand in hand with a person who is an investor. After a breakout or a run up, you usually think, are buyers going to continue to try to break out of this VWAP, or is the amount of transactions? Are you personally going to be somebody who takes that breakout? The most times you're going to be the person who's going to be patient and wait till see if sellers continue to step in, because that's kind of how the market works. They follow each other. So if one, it's like a domino effect. If a seller goes, there will be more, and there will be more, and there will be more. So this happened here again, where we got our small sellers, and then the second candle had a larger amount of sellers. Third, just a little bit below, and then fourth, we had a wick all the way back down to a new low. But then notice how wicked up. This is where I step back in. It's always the bottom wicks, because to me, the strongest candle, when we talked about this last week, is the opening red candle with the closing red candle. Same thing goes with the bullish side. Opening green candle with the closing. Why is that? Because we see a larger amount of sellers, which with a continuation. That's sort of the trend. You want to see it continue. So in this case, sellers been on that wick, and then we got our next green candle followed by a red candle. But notice how it is smaller. If the red candle was larger, it would be more than likely a continuation below this candle. But it wasn't. Less shares being traded, right? And because of that, now we enter like a period of low volume, right? Pretty much some of the lowest volume we've had all morning. So to me, that shows, okay, now since we have that low volume, what should we be watching? Should we be watching for a trade? I personally, in these cases scenarios, I personally would remain silent, patient till we get better amount of transactions in the market where I feel comfortable that calls or puts may be in a location role in what we're watching. So this means I want to be watching some sort of breakout, something like a potential rejection off VWAP again, which if you guys do notice, we did have a lot of low volume, which means low amount of transactions being traded all the way till we finally broke out, right? So then again, followed by again lower transactions, and then buyers start to step in here, which to me shows that we're going to have a little bit small increase and stuff like that. But yeah, this is pretty much the basic of volume price analysis in terms of the volume indicator. So if you guys do have any questions, I'm going to answer them really quickly before going on to the second segment of this presentation. So let me know in the chat while we get started. All right. So is anybody familiar with the name Anna Cooling? She's a sort of famous writer for the book Volume Price Action Analysis, a very famous book for volume, specifically VPA. And in her book, she actually states that the only leading indicator that, when combined with price, is going to truly reveal the direction of the market. She's stating that in terms of what volume is. It is the only sort of indicator, right, that can tell you, when combined with sort of the knowledge of the price action, that you can reveal like where the market is heading, right? Just like up here, we had that example. Seller stepping in. How do we know that? Well, first off, wicks right off the bat, we can see the price begin to decline, right? But also sellers, the amount of transaction being traded there on sell side is it's earlier in the week. What just because this is green and this is red does not mean that the green volume means we're going to go up, or red volume means we're going to go down. No, that just means these are green candles and these are red candles. This is still, these are transactions, y'all. Transactions that are being traded. The amount of shares being traded, the amount of shares being traded. There's no more puts are being traded here than calls. Which direction? We just know shares being traded. Therefore, here, when we're seeing this, it's shares of either puts, calls, whatever it is. It's shares being traded, an increase. Therefore, we got to have an idea that which side looks correct in terms of price action, and we know that we see a selling amount, so we put our position for a reject rather than a call position, because we already know sellers were active there because the price was declining. For y'all, about anti-cooling. So anti-cooling strategy on volume price analysis is very key. If you guys haven't checked out her book already, make sure to. She has a great amount of knowledge in it. Using the indicator is very key because it does help traders understand. Now there are multiple different ways to to check out volume. It isn't only through the indicator. There's actually open interest and volume on the option chain, which we will not be going over today. And also there's tools that are out there in the public, like volume profiles. Volume profiles is another indicator that is very good, and I do recommend for those who do want to try it, give it a try. That's something that's more advanced as well that I will not be covering in this video. And then a third thing that is also key for volume is it's a tool, Bookmap. It's very, very key, helps a lot. But those are three advanced topics on volume that I will not be going over in this video. Instead, we will leave that for a more advanced class in the future. So if you guys do stay tuned, we will get that out to y'all soon. All right. People keep saying it's cutting out, so let me real quickly check the audio. Give me 1 minute. All right, so the microphone has been reset. Let me know if there's still an issue throughout the video. But yeah, let's see. All right, so we're gonna go over supply and demand, effort and results, and ways that these are the two ways that investors use volume to trade, right? So these are price action with also understanding a little bit about psychology. So let's go on to another example. Let's see another chart, something we haven't looked at in a while. Strong supply and demand. And also, I don't know if I discussed this already. There is an importance in viewing volume and different time frames. Because I can go to daily trading hours and see that every open we do have a stronger amount of volume. To me, that doesn't mean that. That just means to me that there is going to be more transactions being traded on that price, right? If you're day trading deeper depth, 5 minute, 3 minute, 1 minute volume. For volume on the volume indicator, I personally would recommend 3 minute, 1 minute, or 5 minute, but specifically 3 minute for reading it. It's much smoother to read, in my opinion. But yeah, going on to the hour, if you're trying to take a swing position and try to figure out what's the amount of volume being traded, it's going to be a little tough because there is a lot of opening volume that you have to see and sort of make out the difference of where is it that buyers may step in. But it's always good to look at it from an area of like this, where we are at a high and we're potentially breaking it. We have a lot of volume stepping in compared to the previous trading days opening, right? So that would tell me, okay, then that's likely to continue going up. Then we get another few candles that have that same volume strength, and they did continue, and they did continue, and eventually those sellers came in. So yeah, it is good. In fact, specifically, a lot of volume was used for our breakout here. We had a good amount of sellers on that breakout, so that's what we personally took that day, because the amount of shares being traded in that time of breakout on our swings was a fit for me to try and get in. But then eventually we did step back in there. We held through, and then it continued to sell, and then we've had some straight until this day. We're still selling. But yeah, let me go back on topic. Let's go and find a stock with a noticeable supply and demand that we can see. Let's start off with Amazon. Amazon looks good. Right off the bat, I'm looking at something where we're seeing a lot of sellers at, right up here. Right off the bat, I can see that there's sellers here. Why? Because we have 1, 2, 3, 4 wick rejections off of the 155.23, and even in this day we had the same sort of rejections up there, a little bit higher, but we know that it's in this vicinity. I will also try to go back to see if this is the location where I can confirm somewhere recent. Let's see. So yeah, we do have small buyers down there. We have some sellers there, but nothing intact, nothing set in stone. It's a large selling area, sell zone. So we can try and have an idea of that. All right. So using supply zones when figuring out a reject or even a demand zone, right? What is going on in these zones, right? What is it that is being this? What is it that is occurring in the market in these zones, right? In these zones, supply and demand, both of them, there is an attempt occurring there, an attempt to break out, an attempt to reverse, an attempt, right? So there is something going on there to where buyers and the mindset and the psychology of a buyer, they're trying to continue breaking that supply so we can go up. While sellers, they don't want the price to, they don't think the stock is valued like that, right? Because that's how the market works. It's the valuation of a company. They don't think it's valued at 155. They're going to sell the company. They're going to sell their shares. They're going to sell their day trade. They're going to day trade, sell their stuff, right? Now, in the psychology of a trader, there is an attempt on both sides occurring in a supply zone and a demand zone, right? With that being said, we have to discuss what is it that we see in volume that allows me to trade rejects or trade puts or trade whatever, right? We have to see that what is happening is there is a continuation in some sort of accumulation occurring in that zone, right? Now this could mean this, right? This could mean right here where we see a large amount of volume, which we did get a good amount of transactions being traded. The thing with that is you got to understand that when you do see it, there's a big move coming your way, either bull side, put side, bear side. That is something that's going to happen. That's why supply zones are one of my favorites to trade in demand zones, because when you're at that low, right, we can even mark this as a potential demand zone. Right off the bat, could say this: we got the low here, we got the high there, got a reject there. So we could say this is small sell zone for sellers. Reason being is because we are looking for where buy zones, where buyers are being accumulated, where sellers are being accumulated. The idea is the amount of shares that are being transacted. That signifies big moves, right? Or we got that out of the way. Now we're looking for what is going to be the directional move. This is where price action analysis comes in. That is occurring there, right? Same thing if you were to look at Bookmap. You, as someone looking at that tool, And this is what people get confused. They believe that Bookmap tells you specifically that buyers are going in there. They tell you that sellers are specifically going in there. No, it just tells you that the amount of shares being traded there is in this form. It gives you a visual representation, which is why I love that tool so much. Same thing goes for this. This is a visual representation, just in a more simplistic form. All right, so here we're seeing a reject there, followed by a similar reject there. No transaction is being graded to the other on this side. And then we got something smaller here, which is sort of like a small wick indecision candle, or eventually we get another breakout. This one, it's smaller, right? We have one long wick here. That tells me the sellers were very active, while buyers did try to accumulate. They did fail at the resistance, right? Again, for the second time, transactions aren't really as high or stronger than before. It tells me low amount of trades are being taken. Therefore, I have to be cautious if I do want to take calls, because lower amount of trades are being taken. So then here we got an indecision candle with a lower amount of transactions being traded, and then boom, we have some good amount of transactions. But to me, that transaction is a break and a reentrance. You're gonna notice another thing right here. We don't see any other full 5-minute candle above it with open strength. To me, when I see a 5-minute candle with open strength, this goes back to price action analysis. That means the strength will continue. It means that we will continue going up. Same thing here. If we had a 5-minute open above that, I'd expect us to continue up. But since we did not do that, what I see on the volume side is low amount of transactions, lower trends to have a large move because the amount of transactions occurring there are sell side. And then here we get some volume coming in, or transaction coming in, volume coming in, and then we get a little bit of a pump there, and then a reject here, right? With a strong amount of volume being traded there. So now, for me as a person who's going to look for a potential swing trade, based off of this information here, the amount of transactions traded in that day had some good moves. We had some sellers. This seemed like it was only because of the opening move, because that is the first hour, 14:30. So what I'll be watching for potential for Tuesday, because the market is closed on Monday, would probably be for, okay, we failed this location. Are we going to have enough traders or enough accumulation in this price for us to get high, or are we just going to be sold off again? And if we are sold off, as a price action analysis trader, where would I look for puts, right? Where would be something where I deem ready for puts? So if we do have a large amount of transaction below it, then that potentially tells me that sellers are actually going to be active there based off of wicks, based off of opening bearish candles, which this one is what we closed near. 1930, we had an opening bearish candle on the hourly, means an hour of straight drop due to the fact that we opened red and we closed nearly red. That's a sign of strength in selling, but we did close green, as the NASDAQ also did as well. So for me, that tells me that, okay, down. And you also have to use the idea of what is going on in the current market. We are at all-time high, y'all. This is pretty much all-time high. We go to SPY. This is our all-time high on SPY. We are pretty much almost there. So it's very, very unlikely where we hit an all-time high, right? And we just zip straight through. You've only seen that once, and it was this in one day, right? Other than these accumulation where we continue, we've already hit this high. Most times at the all-time high, you're gonna see some sellers, like right here. That's an indecision candle. At least some sellers fall back. Some transaction of sellers. We're at that position right now where we're starting to see that transaction of sellers. But also, we go on the daily, we see there's lower transactions today than there was yesterday. Same thing for the last few days. Lower transaction than, so it is a Friday, so have that in mind. That we are approaching this high. What could happen? Is it going to be active here? Or is there going to be more traders trading here? Is there going to be more accumulation? Are they going to try to push us up? Or are they going to try to take this opportunity and reject us? That's going to be something that, as a psychology trading portion of it, you'd have to kind of think of when trading, while using your takes pride in the volume price analysis, because that is something that is very, very important. So, all right, then we covered the supply zone. We covered a little bit of that. We're going to go over and discuss what effort and result is. um, when trading. So when you see a small increase in price but a large increase in volume, this means there is effort to break out. So if you're watching a breakout, right? Let's say all-time high for this example, and there's a small increase, right? Very, very, very small. Let's say like this. Small increase in price, but a large increase in volume, large increase in transaction, say a large increase in that. That means the stock is being accumulated. There is people buying up. There's something going on there where it's being accumulated, right? Whether for sellers or whether for bullish. That means we gotta watch because a big move is coming, either up or down. We have to be aware of that. So if the bullish candle is a breakout on the next candle, and we see a large amount of volume, that means that there is effort in buyers attempting to break, right? Therefore, the volume that was here, I'd be watching for a continuation. That is what you would ideally use when trading. Most times that will also signify that the stock is weak and it can result in the end of the bullish or bearish trend. So if you are at the breakout, let's say you trended up and you get to this area and you see small price but the accumulation, don't be fooled that this is just going to be a breakout because there's a large amount of volume being traded. It could also mean that our next candle is a reject, right? And a large move down, a large move potentially waiting to occur. We just have to be aware of which side that is and using our knowledge on the previous hours. So if we know that in the last few hours you've had good strength, right? And every time sellers got down to like this point here, for example, we got down to this, we kept buying, the stock kept buying up, right? Therefore, now that we're at it and we see a large amount of volume with a low price move, means it's being accumulated. All right, puts, because if I'm watching for puts, then I'm waiting for the breakout on the trend of the lower low. So if we got down below here, then I watch for puts. That's the kind of idea, sort of mindset you want to have when trading. The effort of a breakout or effort of a rebound works both ways. Volume, again, we're going to end it off with this, is transactions. It is something that is being accumulated, something that's being sold. It's transactions in the market. So that's what I want you guys to take away with today. The basics, the very, very basics of all this. So yeah, we're gonna end it off here with any questions that you guys have. It was very, very basic. It was something that I want y'all to take away with the starting, using it with price action analysis, using it with psychology analysis, and trading wisely with that in mind. No, perfect. Glad you guys learned something. All right, y'all. Then, if there's no questions, we will end the live here. I hope y'all learned a lot. It was something that was very simple. It's not talked about enough. Um, and I think this is something that will help a lot of basic traders, newer traders, get into the idea of how trading psychology works, how trading price action works, how volume price analysis works, and use that to kind of branch off and learn something. Go over the options trading for the Greek, and we will discuss that thoroughly. Perfect, y'all. So I hope y'all have a great weekend. Monday, the trading is out. Stay tuned till next week. Come to see the Greek, the option chain, how that works, the basics of that, and how we option traders position ourselves to take contracts in the market. So stay tuned. Hope y'all have a great weekend, and I'll see y'all on Tuesday. Peace out.